Okay, just the candles. Remember, all of these are painted on the 15-minute chart. Let's take a look at what we have here. Identify where we're at, right here. Are you looking to take this long or short? And while you're thinking, I have to let people know, we take a look at 3 different charts. We look at one with the candles on the white background, one with the candles on the gray background, EMAs, and one's with the all the indicators. I've been putting the ones with the EMAs last. That's my preferred template. I like EMAs and a blank chart, but the consensus of the people was to have it second. So we're going to put this one second, let you determine your bias. And then we'll take a look at it with all the indicators and talk about what we're looking at here. So this is the day marker. Lets us know we're trading on Friday. Because at the end of the day, this will be Sunday, this will be Monday. Let's take a look at this with all our indicators. All right, so let's take a look at what we've got here. High of the day has been set, kind of set with that double top, right? Push down, give us a couple nice pushes, set right to that previous day low. Now I know we don't have pivots and ADR on here, so it's going to be a little bit difficult to truly analyze these charts, but let's take a look at what we've got. Take a look at TDI. Here we got a couple pushes. We got 1, 2 pushes, and we're starting to pull back. Take a look at what our TDI is showing us. We're up near that extreme now. Our extremes, we're outside that volatility band. But what do we know about the structure? For all of you who said I'm going short right here. After 3 pushes, we start to look for that candle formation. So let's take a look and see what actually happens. Get a little pullback in price, and it takes off for that third one, and then reverses out, and eventually goes short. So let's take a look at it here. Let's look at it with those indicators. All right, we were taking a look at it right here just before that New York session. If you were looking for the reversal, this is where identifying your levels can be very, very helpful. This is convincing. This is a convincing trade short. It really is. Working that high of the day. TDI was way outside. It's up near overbought, outside that volatility band, getting close to our extreme right here. As you can tell, yeah, we don't have the ADR on here, but yesterday we could see the high and the low, and you could see that it hadn't quite moved all the way as of yet. We still had 1, 2, nice pullback, 3 pushes, works that high for 45 minutes, reverses out for about 45 pips, almost to that 50 EMA, comes back up into the range, starts to consolidate. All right, let's take a look at our next one. Let's see what we've got next. I'll give you a second to look at it here. Count it up, then we'll give you some EMAs. Take a look at it with some EMAs. All right, let's take a look at it with some indicators. All right, so what are we seeing here? We're seeing some consolidation. Remember we talked about consolidation on the EMA? Means that we might have a straightaway move, a move without a false move to the opposite side or without that stop line. So we can see that the 50 EMA catches up, is consolidating right here, just bam, takes off, 1 shift candle, slowly works its way back, pins that 50 EMA, bam. Move number 2, possibly move number 3. We're paying attention to this candle here. Take a look at what we came outside the volatility band early London. We're up near that high of the day once again. We've come back inside of that volatility band. Now, however, there's a couple things we've talked about. Look at those pins on the 13 EMA right there. Take a look at those pins on the 13 EMA. We talked about how sometimes retracing back to this market baseline can help us indicate the continuation move. And if we actually take a look at these pins on the 13 EMA and how that RSI price line didn't quite break the market baseline, the yellow one here, the green touches that yellow, hasn't really taken off. We're about to come into that New York session. Are we looking to take this pair long? we're looking to take this pair short.
One more point too is that this pair still has momentum because look at the strength and angle of all of these EMAs. None of them are collapsing yet. None of them are rounding out yet.
Very good point. That's why it's nice to just look at it with the EMAs. You can tell the momentum by those EMAs. So let's take a look at what actually happens. Bam. They come right back down here. They pin it and they take off for that third push. Never really offer a reversal, going to consolidation. Now take a look. If you were looking right here and you entered the continuation here because we did recognize that, you might have taken a little heat with this pin to the 50 EMA, but it does pay out. Now, if you came to the market right here somewhere before your New York session check down, you get a beautiful opportunity for entry. Take a look at what happens with this pin. Doesn't quite get that 50 EMA, awfully close. Take a look at what the TDI signal to us. Beautiful continuation move. Let's count it. One shift candle. A second good move. This could, I mean, technically, this could be counted as one move. There's no way that it's moved three. We know that it's not near its ADR yet. Obviously, another move was coming out of this pair. Big time catcher. Now, this pair, this is the Euro Australian. It moves a lot more than some of those other pairs. So, yeah.
This is a perfect example of what I was talking about earlier when I said, now, if you identify a strike zone and everything's all lined up, ask yourself, is my candle pattern, is my daily structure in agreement with this strike zone? And obviously here it was not. You did not have that third move. You had great momentum still in your EMAs. You could look at those pins on the 13 and tell what the market maker intention was. This is an invalid strike zone because the pattern is conflicting with your strike zone.
That's part of learning to recognize your daily structure. Just because you have indicators lining up in one place, if your daily structure, your candle formation is not painting out and it's not in line with your indicators and your strike zone, it's a conflicting trade. It's sending conflicting signals. Don't trade it unless you're sure of what it's going to do. And I'm going to let you guys know, I think this was like June 5th or 6th. It's at the beginning of the month. The next chart that I'm going to show you, now don't go take a look in your platform. The next chart I'm going to show you is a continuation of the next day. This thing painted out the daily structure beautifully 2 days in a row. So let's move on to the next day right here. This is a continuation right here. Let me go back. This right here, I don't know if you can recognize it. Let's see this up right here. Bam, it's continuing right there. So take a look at what you got. Give you just a few seconds on this one. Let's take a look at it with some EMAs. Take a look at the momentum that this thing's still moving with. All right, let's take a look at it with some indicators. Coming into this one just before the London session. You guys a second to type in what you're seeing. All right, let's talk about it. The consolidation, remember how we talked about we like to see this blue box at about 50 pips? But if it's expanded, scoot it over just a little bit to the left. Move it to that consolidation range. Right here, we're in the trend move. This is the trend move already. That's one push up. That's two, gives us that second little pullback. We got three. This third one's a mini one. We got three pushes coming up in the day. So now we know that it's time that we start to look for a reversal, right? Take a look at what we're seeing right here. We got a couple pins to that 13 EMA right here. It's at that market baseline. We've already missed our opportunity for a fourth push if it's going to happen. So now what we're doing is we're waiting to see if this high holds on this other push that we have on the 13 EMA. We're going to pay attention to that shadow box. We're going to see if a pin's thrown towards that high. We get a hammer hanging in. We want to see what kind of candle formation paints up here in our strike zone near this box. Can pay attention to this move right here, see if there's any resistance. I'm going to wait for it and let's see what actually happens. Taking a look at this chart, it pushed up, pulled back, that 13 EMA lost its momentum. Let's actually go to that next one. Let me come here. As you can see, when we were looking for that continuation move, when we came, look at how that 13 EMA starts to round out, like my mom was just saying. It doesn't get up to, it doesn't continue to push. After this pin, there were a few pips. There's probably a scratch trade if you look for the continuation move. But there's 3 pushes. We start to look for the reversal or signs of a reversal. We identify if there's possible continuation move. Let's see what it does. Let's see how it reacts at the high of the day. If it doesn't, we see it work in this area. We see the EMA start to round out. Hopefully you can capture an entry right in here, trade it back to that 50 EMA, capture your reversal pips, maybe a solid 25. If you got a fixed take profit. Identifying where you're at in the market structure or in that daily cycle, being able to identify your pushes, your levels, your moves, your pins, possible opportunities if they're going to push it another 4th level, being able to identify where you're at is going to greatly help you improve your trading accuracy and be able to take any kind of move, whether it's the continuation, the reversal, or the trend move. So let's move on to another chart. Let's take a look. Before we move on,
I just want to add just a little bit of something. It's very, very subtle. But if you think of the kindergartner drawing a rainbow, when we looked at it the first time, it was just solid straight up. There was no curve at all. If you think of the kindergartner starting to try to draw a rainbow with these EMAs, this is straight up. Just straight. It's pointing. It's telling you, look at the sunshine. Look at it over there. And it's pointing straight up at the corner. If you go to the next slide, or the next pair, you start to see like how a kindergartner would draw a rainbow with all 3 of these lines. They're starting to round, they're just starting to round out. They're starting to look like that picture that your little kindergartner draws for you at school of a little rainbow rounding out there. And it's very subtle, but it's a very good indicator of momentum and what it's doing.
excellent point. That's why I like to have that template with just the EMAs. That's why I like to look at just the EMAs so that we can see that momentum. We can see their intentions. We can really identify pins and moves based off this look right here. All right, let's take a look at another chart. Let's identify where we're at. Show you this just a couple seconds more. All right, let's take a look with some EMAs. Here's the beginning of that day. So right here, we're probably at about that New York session. Let's take a look at it with some indicators. What are we seeing? What's our bias? Where are we looking to trade it? What's our strike zone? Let's talk about it. Consolidation, trend move starts. 1. You see that pullback, tracks on that 200, many pins. We get that second move, bam, comes down here to 13 EMA. We get that third move. Now, notice on this one, take a look at our EMAs. What's our 5 starting to do? What's our 13 starting to do? Look at our 50, look at our 200. It's all starting to flatten out. Take a look at our TDI. What are we seeing? This double top in price, flowing in about the same area at about 67, but yet price is trending up. We're near that previous day high. We're in the shadow box. It's another no. All these are reasons as to why we should look for signs of a reversal, and they're giving them to us. We are seeing the signs of a reversal for this pair. Let's take a look at what actually happens. They pull back, they give us a double top, and it flushes. Like I said, they pull back with that double top and a flush price. You can see 50 plus pips. One candle, if you got in with the retest of this price up here, we'd like to see retest of the bodies. You get in there, one candle, you're paid out by 50 EMA. Notice how this comes in that shadow box. Notice how you can start to see those EMAs rounding out. Notice how you can see the pushes, 3. That means we start to look for the signs of a reversal. And even if you set yours at the 200 because you were aggressive, it went right there.
Just want to take a super microscopic look at this because it happens a lot. That very top candle over here near the previous day high, you have 3 downward pushes from that candle that completely engulf the previous candle. And as a matter of fact, this is the actual reversal pattern that I love. Even in these 2 right here, you'll often see these 3, I forget what it's called, there's a camera. But I hate to trade the 3 because you're so far off. But we have the dark cloud cover right here. And what I love about dark cloud cover is that even if it's 2 or 3 candles later, you almost always get that push back up. Now, what happens when you see, oh, here's dark cloud cover, here's that push back up that they talk about as strike zone trading for the entire 4 days, every day they mentioned it. Where do your eyes shift? Your eyes shift to your daily dashboard, and you're going to look for it to pull within 10 pips of the high and grab that trade. Remember what I said about you have to have the guts to take it when the candle's green.
Excellent point. And if you were waiting for this one to turn red, it never happened. Get in on that green candle, paid out in 15 minutes. Let's take a look at another chart here. Identifying where we're at in the daily structure. Now let's look at it for a few seconds. And then we'll move on. Here's some EMAs. Start to take a look at it. Identify with some EMAs on there. Determine your bias. And you can see this is the beginning of the day. This is the end of the day. Let's look at it with some indicators now. Came in during that New York session. Nice tight 42 pips. Good consolidation. See the pins. We see multiple drops. We see 1, 2, 3, 4. 3, 4, however you want to count it. We know that it's time to start looking for the reversal. However, what are we seeing right here? Take a look at that hanging man right there. Very next candle, it pulls back up, retraces. We can tell by the pips that, and tell by looking at TDI. Our bias is to turn off the screen and come back tomorrow. Or if you're going to sit in front of the screen, your bias should be long. I see we got a couple longs over there. Should be looking for a retest of that price low, looking to trade that reversal. Let's take a look and see what actually happens. We come in, and this is ugly. And this is why I'm saying your bias should be long, looking for those signs of the reversal. What were our signs of that reversal? Multiple pushes, ADR, all those things, TDI, and this hanging man right here. Hammer, whatever you want to call it, shooting star. This candle formation right here and that pullback lets us know that we may have missed it or that we need to be looking for those signals. Take a look at all these pins that they drew. They eventually come up. Let's look at it with some EMAs. They go right to that 50 EMA. This is definitely, you should be looking for that long entry, but you may have missed it. This is really ugly. Where do you actually get in on this trade? You get in right there. That's one of those, instead of the tippy top trades, it's a tippy bottom trade. But I don't know, the actual, you're not getting in on this trade. Like I said, it does follow the pattern. As you can see, sets that low, it pulls back, it even retests it a couple of times with pins. There's no real entry on this pair. But you stick to your rules, you stick to your bias, and you're not going to get burned. And that is the candle formation that lets you know that you were looking for that reversal.
Give you an entry that because Canaan trades mostly the London and we trade the US. I'm going to give you a beautiful entry on this trade. When you see this double pin, this green candle close over here, way up here, and you see clearly this double pin to the bottom right here, where can your eyes shift? Shift your eyes where? and just wait and see if it comes back, because half an hour later it comes back and offers you an entry within 10 pips of the low. So depending on if you want to sit there or not. Like Kaden said, way over here at this hanging man, when it was farting around, your bias could have just been, my bias is come back and check tomorrow. But if your time frame is, no, this is my time frame, I'm a time frame trader, and I'm going to be here for 2 hours or 3 hours, you get that second pin, and that second pin closes, and 2 candles later it offers you an opportunity to enter. Now, remember what we talked about, we said it over and over again. Once this big second pin candle closes, the pattern is set. That is a double pin bottom. It's done. The end. That's a reversal pattern. It's in your strike zone. Everything's lining up. Your EMAs are curving around like that kindergarten rainbow that we talked about. And so all you need to do is shift your eyes to that high of the day. If it offers you a price in the next 30 or 45 minutes that you're time trading anyway, then you have a good entry.
They got a little bit more patience and chart experience than me. My bias on that one was the power button on the screen, turning it off and coming back another day. All right, let's take a look. Oh, here it is with some indicators. You can see this one was good for 30, 35 overall. So if you had a 20, 25, it'd take profit on this. I believe this was euro dollar, so 20, 25 is very good for you. 25% of your run on the retracement. You're good to go. All right, one more chart. Let's take a look at one more chart. Let's look at it. Let's get some EMAs there. All right, let's get some indicators. Okay, what do we have? We've come out of consolidation. You can see 1, 2 very, very clear drops, right? This one, it busted outside our volatility band here. They came back up. Now, honestly, you're probably looking for the continuation trade short. Now, when you see all these pins in this area here, you're not looking for signs of a reversal after 2 pushes or drop or rise after only 2. But when they stare you in the face like this, you don't have to be looking for it. You can see it. This is it pins this area in that shadow box in the New York session, and then it pins this area again, in the London session, and then it pins this area again in the New York session. So your rules, they're going to help keep you out of trouble. But at the same time, because you're not going to be looking to trade this pair out for reversal until it's down in this area, and there is absolutely no reason that you should be getting into this trade short at the low of the day. If you're looking for a continuation move on a pullback, this pin at 13 you might have gotten stopped out here. So that's a nice pin on that doji. But hopefully you waited for some sort of retest, and when you saw this one come up here, you got a better price for entry. Eventually that continuation pays out 30 plus pips. But when you see this right here, these pins set in the shadow box, retested in the next session in the shadow box, even if you're not looking for a reversal, that should be flashing on your screen. Reversal, reversal. Because that's clear as day.
Not myself. You can't jump in here. Remember when I told you about those pokes outside volatility band? You see these double bottom pins right here at the low of the day, at the extreme with that poke outside. Remember when I told you about the RSI can confirm what you think you see in a candle pattern? There it is right there. It's totally confirming for you. Wow, it's just screaming. These candle patterns can keep you from falling for market maker traps. Now I know that we're showing you most of the time. Here's the deal: when you look for a strike zone, it's really going to give you about 80 to 85% safe trades. We're teaching you, we keep showing you these charts that were exceptions. And they're out there. You do get the exceptions. But here's how you recognize those exceptions and take advantage of them and trade them. When that candle pattern is just screaming at you like that, if you don't see that multi-session double bottom, pin double bottom is a screaming reversal that you keep looking at candle patterns, because as soon as this chart lights up, it almost says from my screen the word reversal. It's like that old Sizzler commercial. Remember, it goes Sizzler. This one goes reversal. And if you're not seeing that, keep studying your candle patterns and marking them on your spreadsheet, because that is plain as day.
Now, the reason we're showing you the exceptions to the rule is because we're trying to show you that it's not 100%. That's why nobody trades 100%. And we're showing you what the exception to the rule looks like and how you need to be able to identify it. Because, yes, if a pair distributes the weekly behavior, and then it distributes the daily behavior, and it gives you the ultimate ideal candle formation in the strike zone, those are lights out trades. Those are the ones where people end up putting on, 100% risk management out the door, and then they end up losing their account, because sometimes there's the exception to the rule, and you have to learn how to recognize it so that you can manage your trades. You can know when to pull out, you can know when to scratch out. There are exceptions to the rule. However, it's not very often, and they're blatantly obvious once you learn how to recognize them. Once your 20/20 chart vision comes in clear, it's very, very easy to see. All right, let's take a look at what actually happens. Just kind of continues up. They actually give you one more opportunity. They pin it a third time. So if you were like, I'm not feeling good long, I'm not feeling good short, and they pin this a third time, hopefully you're feeling good long by that point in time. And then they give you an opportunity to get in on a continuation long right over here. Bam, they take off. Let me show you that on some EMAs. Give it to you here. Throw some pins down this way. Continue. Doesn't always line up perfect. Yeah.
Talking about not lining up perfect, a lot of times we use these dotted line session dividers for the 24 hours, like our shadow boxes. If you take this trade and you take this big, huge doji pin in the Asian session over here, if you take that and you move it over to your dotted lines, and then you take this big, long green candle and you move it over at the end, at the next Asian session, and you move it over to the dotted line, what kind of a day is that? That is an exact trading day. Is that not a beautiful trading day? It was just 4 candles off, and they'll use those little 4 candles to screw up your vision every time. You just got to keep looking at these charts, doing your drills, and you're going to see it.
Take a look at it here. It's a little bit easier to recognize that trading day. Starts here. It's just for the first candle of the trading day. Comes out. Bam. It doesn't quite run the entire ADR like I talked about. Runs a little bit under. That's why there was that never little extension. And then you can see they come right back up and look. Perfect example of trading day. All right. That would be part 3 completed of the behavioral analysis of areas of time compressions. We're going to take another 10-minute break, the last break of our course.